This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is July 19th, 2021. Show number 299. Just one more to go to the magic 300. Most podcasts last an average of 10 to 20 episodes. So Nick, we've gone 10 to 15 times longer than the average podcast. So that means something, doesn't it?
It is saying a lot. You know, when we don't have the show posted right away, believe it or not, I'll get a dozen emails from a lot of the members. So it goes to show that we're trying to help people. We've done, I think, a very, very good job of it over the course of the podcast. And hopefully we could do a lot more and help a lot more people.
I hope so. And hey, today was a day where the PPT obviously stayed over on Monday at the Hamptons or wherever they go, Martha's Vineyard or wherever they go. Maybe they're in Maryland someplace. Maybe they're on Jekyll Island figuring out Fed 2.0. I don't know where they are, but they certainly weren't doing their job today, were they?
No, they weren't doing their job today. And we saw it in all the major indexes. The Dow took the biggest hit, down about 2.09%, but it was a broad-based decline. Everything was lower. The NASDAQ down 1.06%. The transports down 1.5% again. The S&P 500 down 1.5%. The Russell 2000, which has really been weak lately, down 1.5%. So it was a pretty good decline, a broad-based decline, and it was on volume today. So that really makes it meaningful.
So let's talk about that because Nick Santiago Market Forecasting 101 is when the Spydrs sell off on volume, beware.
That's right. And that happened today. In fact, the Spydr volume as we speak right now, 147.3 million shares. And the last time we saw the Spydr volume even get close to 100 million shares or get above 100 million, you have to go back to the 18th of June, which happened to be an options expiration Friday. And on that day, it was 118 million shares. So, you know, anytime we get an options X, especially a quad witch, that volume is expected to be higher because you get rebalancing, you get an exercising of options going on. There's a lot of activity, but today was just straight selling. Now, the Spydrs, to their credit, held the 50-day moving average at around $423. If you're looking at the cash S&P, the 20-period moving average was defended at around 42.40. But this was an ugly sell-off on volume, and this puts you right into caution mode.
Ugly sell-off. And just remember, last week, Nick, one of their headlines was putrid volume. Now, there was nothing putrid about today's volume, was there?
No, today's volume was big. And not only was it big, but it occurred where you had leadership like the financials fall apart. Now, they've been deteriorating over the last couple of weeks, but energy, that's been a very, very strong area. That really came down with some vengeance today, and that's been rolling over. So you're seeing these places of interest that have been very strong, these sectors, these industry groups that have been very strong, they're now starting to roll over. And I think that is really, really the telltale theme out here. So you got to be very, very careful going forward right now.
All right. So what's your prognostication here? More weakness and lower share prices, or will the Fed, hit the fast forward key on the printing presses?
Well, I think they're probably going to try something. I don't think they're going to let the market go into fear mode, right? So today, a lot of the talking heads in the financial media were like, it's a down day. It's not a big deal. But it wasn't just a regular down day. This was a down day with velocity. And I think that's what everybody should take note of. Yeah, they'll bounce them. Nothing goes down in a straight line. Everything will get bounces. But today we saw some really, really good selling pressure. And I think you got to go into caution mode. I'm going to do a little bit more work on all of this tonight, obviously. But, I think right now you definitely want to be a little bit careful out here.
Hey, careful is the byword, right? And caution, when you see the market going down, you don't want to try to catch a falling knife. Oh, I see value there, right? But what about the lower bond yields? I mean, bond yields are sinking like a stone. That's a bad sign for everything, for the economy. It means there's no loan demand. And if you caught that article in Zero Hedge, it was almost a repeat of an article they wrote 6 months ago, which basically said reserves, bank funds on deposit, are way up, and loan demand since the 08-09 financial collapse has been stagnant or declining. What does that tell you?
Well, it tells you that there's problems in the banking system, and I can't put my finger on it and tell you exactly what that problem is, but the repo market's been having issues for months now. And if you take a look at, say, the 10-year U.S. Treasury note yield, everybody used to rejoice when yields went down. Technology would rally up, gold would rally up. That's not the case at the moment. And today, yields were down another 12 basis points, finishing at 1.18% on the 10-year U.S. Treasury note. And that is fast track to issues. So, now all of a sudden yields go down, that's bad for the market, right? So, how things and these correlations can change. This correlation has definitely changed, and it's given us a little warning sign that there's something wrong with the financial system.
Who would have thunk? Who would think? Everything has been so good for so long, Nick. Well, no discussion of what ails the financial system would be complete without a discussion of cryptocurrencies and of gold and silver. So let's take Bitcoin first. It took a bit of a hit today, didn't it?
Yeah, Bitcoin was under some pressure. So when it was all said and done, just testing just a little bit above that 30,700 level. But as I've been saying, on the chart, this is just what we call a bearish consolidation pattern on the daily and weekly charts, ultimately indicating lower price to go. So I think we're going to see Bitcoin test 22,000 very shortly. We'll see what it does tomorrow, but I just don't see any real strength in this chart. Now, it hasn't broken down. It has not taken out the low from the 22nd of June, which was around 28,800. But if you close below that low, the odds are very, very favorable. You're going to do a fast track down to the low 20,000 area.
Yeah, and once it goes below that, and you remember I had a headline, Bitcoin 17,000, and the haters were out in record numbers there. We don't know anything, you don't understand, cryptos are different, blah 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 blah. Right now I'm looking at Bitcoin 30,768.20. Now it's a meaningless number because every exchange you go to is going to give you a different price, and it trades all the time. But come Friday, if that thing's below 30, Bitcoin's in trouble.
I think it's in trouble already. So I'm going to, I've put it out there that we're going to go down to the low 20,000 level. And if that level fails, you're going to go to 6,000. So, there's a lot of people out there that have a lot at stake. Remember, the crowd bought in at Bitcoin and when it was at 60,000. And we were talking about it back here. If you go back to April and people listen to any of those shows, I said, this is a parabolic move. They all end the same way. And it's going to be a lot lower. These things get cut in half. Well, this has been more than cut in half. So, there's a lot more downside in Bitcoin. The big test, like I said, will be around the 20,000, 22,000 level. But if that fails, watch out below. This thing has a long way down after that.
And Nick, if that isn't the end of the story, we'll see another run up again. My guess is it'll go over 100, but it's going to take probably 9 months to 18 months for all the people that lost their shirts in Bitcoin to forget about it and start seeing shiny objects and jump in again. But it's a cycle in Bitcoin. There's been 7 of these major crashes, but each crash, and we'll see how this one works, generally the low was a higher low. And I don't know that it's going to turn out that way this time.
Well, think about it this time. You've gone from a high print in April of 65,500. We just went as low as 28,800. The next break takes you down probably to 22,000, possibly 20. And then after that, you go all the way back down and you revisit where you were, back in April of 2020. And that would be back around 7,000. That's how markets work. They test support levels. If they fail to hold, they go down and test the next support level. There's no real in between there. And I just urge everybody to be real careful with this stuff. I can't walk through a supermarket without 20 people asking me about Bitcoin. It's incredible.
Well, that would be the mother of all crashes, wouldn't it?
It would be, and it will be. I think you're going to see that. I really think that this Bitcoin phenomenon is got a lot of weak holders. And I know there's a lot of people that have vested interests out there. They want these ETFs to come out. They want to have some kind of regulation information so that they can make money off their product. But, I can't remember a time in history where the bankers would allow extra competition. And I just don't see them allowing it again. Call me strange or call me crazy, but I just don't think the bankers really are going to allow Bitcoin to last.
Yeah, well, they might very well have other plans for it. Hey, so gold down a little today in the final bell, but silver really got slammed.
Yeah, so silver was hit today kind of hard. I mean, silver was down about 2%. It wasn't a death sentence to silver, still sitting at around 25, 23 on the futures. Gold really hung in there pretty well today. So I have to say I was impressed with the gold move overall. It was getting hit earlier, then came back a bit. So that wasn't a nightmare. But what I don't like that I saw today was gold miners, especially the GDX, which is the ETF for the large gold miners stocks. They were down 2% as well. And that pattern is not looking very strong. So I never like when the gold miners lag the metal, and that's happening right now.
That's always a bad sign for sure. You want it the opposite way. Well, I think that is it for today, Nick. Hey, just send us your emails to kl@kerrylutz.com. Go over to inthemoneystocks.com. Find out how Nick does it. Find out how he called this Bitcoin crash way back. God, it's almost 3 months ago already, Nick. Called it almost to the day. And find out how to figure out entry points and exit points in all your trades. It'll make you money and it will save you money on losses. Check out the Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. And again, emails kl@kerrylutz.com. Promise we'll get to them this week. I've just gotten moved in. Studio is set up and working great. Nick, we will talk to you on Wednesday, but if there's another crazy day like today, we might very well put in a quickie emergency session.
Absolutely. It sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.